Hey, hello guys. Good day, and of course, welcome once again to Forexnetworkgroup. Today is going to be our academic section where we're talking about the topic which a lot of people have been asking me when am I gonna drop the video. They want to know more about the indicators. So that's what we'll be talking about today. So our topic today is the best indicator for mobile trading. Which are the best indicator for mobile trading? Because the difference between mobile trading and the laptop or the PC form is, yeah, you have access to more wider range when it comes to the PC. When it comes to the mobile, you have lesser view of the market, so you don't have to see a lot of things happening that has happened or that's going to happen in the market. So that's why we've selected some few indicators which we have back tested and confirmed that it's working. But first, before we go into indicators, I want you to know that first, indicators are lagging as softwares. When I mean lagging, like they don't tell you what the market is going to do next, but rather they tell you what had happened in the previous market conditions. Okay, let's go into one. Currently, as you can see, there is no any form of indicator on my chart. That's because I don't trade indicators. I trade the naked chart, which is the pure price action with some other things included. But still, I will be telling you which indicators are good and how do you really use them. Now that you've known that indicators are lagging, more like they don't tell you what's going to happen next, but they told you or that they tell you what had happened in the market. So now, which indicator and which indicator are you going to use? First, you should consider like what do you want to know about the market. That's the first thing that comes to your mind when you're selecting an indicator. Because you can't just open a chart, just put an indicator, maybe because you saw it on YouTube, someone uses this indicator and I felt like wow, it's good. You should consider like ask yourself like this indicator you're using, what is it your main aim? Like why are you using this particular indicator? Sorry, please. You should ask yourself why are you using that particular indicator? And I believe the moment the majority of traders why they are really using this word to be able to detect what is likely to happen next in the market, which is what the indicator doesn't do. Remember, the market tells you what had happened, not what's going to happen next. But as a trader, we are using that past action to determine what is likely what to happen next. So what do we really need on this indicator? So that brings me to two major type of indicator which I will recommend, and those are trend indicators and oscillators. When I mean trend indicators, these are the ones that tells you the current trend of the market, and most time this indicator can also serve as the support and the resistance, or what we call the demand and supply zones, and that's a little bit of what price action. So that's why I recommend a trend indicator. So which is the most popular trend indicator is the moving average. So first let me remove, sorry please, let me get rid of all this. Then this is the naked chart. So let's put all these you can see here, they are all trend indicators, but the one we'll be using is the what moving average. At the default moving average setting is a 10 period moving average, but we won't be using the 10 period moving average because the 10 period is the moving average is a bit let me use the word, let me say it's a bit uh, sensitive to the market, so it causes a lot of noise in the market. So choosing a better moving average, the best option depends on what really do you want to attain. If you want to know the longer time of the market, you can choose the 200 period moving average. If you want to know the average, you can go with the what 100 period moving average. And if you want to know the present, you can go with what with the 50 period moving average. Anything below the 50, you're trying to know what is happening, like the instant of the market, and that is can give you a lot of negative signals. So that's why I don't allow or advise people to use 10 moving average, like 10 period moving average, because except just to use it for an entering signal, that's when I can like what I can permit the 10 period moving average. You can use it as, let me say, just a signal, an entry signal to what to enter the market. So for the purpose of this video, I'm using the 50 period moving average. So that's my good. So this is the 50 period moving average. You can see the red line on the chart now. That is the 50 period moving average. So remember, I tell you what the current trend of the market. Once the market is above the moving average, we believe the market is currently in uptrend. Once it's above the moving average, we believe the market is currently on a downtrend. And if it seems to be flat, like the moving average seems to be flat, let me for a condition like that. Okay, somewhere around from this moment, you can see right here, down. The moving average seems to be flat, like all this Y. You can see it seems to be flat around there. So that means the market is currently what? In ranging form. So now, what do you now add to the moving average now to give you this better information about the market? Now that you know the trend of the market, we should also know that can also give you act as what, as support or resistance point in the market. What you're going to need next is what I call the oscillators, and not just the oscillators. You need a bound or a limited oscillator. That means like an oscillator that has what, limits. So that's why I prefer the RSI or the stochastic oscillators. Those are my favorites. So let's go to the RSI, or let's use stochastic instead. Okay. Where is stochastic? Okay, sorry. There is it. So the period, just the default setting, you can change all this later. I'm only telling you how to select indicator. You can change the setting later to suit you. So this is the period, this is a default period. So let's just done this. So that means you have something like this on your chart. Then how do you use it? How do you combine these two together to what? To give you a good signal. Remember first, once the market is above the moving average, that means what, the market is currently what, on uptrend or in an uptrend. That means the performing series of what, higher highs and higher lows. So now what are you looking for now with the oscillators? You want the oscillator to get to a zone which they call the what, the oversold level. Remember, there's nothing like oversold. Like the market can never get oversold. It can be in downtrend for as long as possible. But still, let's just still respect that former word, the oversold level of the what, of the stochastic, which is what, the below the what, the 20 period area. That's somewhere below this area. That's what it's called the what, the oversold level. And above the 20 is called the what, overbought. So now once the market is above the moving average, what do? You look for signal to what, you buy the market. Let's say you meet the market somewhere around, okay, let's say somewhere around here. Then the market goes above the moving average. So at this moment now, you've already realized the market is likely to change direction if it's continue moving above the moving average. So what are you looking for now? You're waiting for this oscillator right here to come down to the 20 level, or even not direct to the level, but you want to come down to the level, to the below the 50 line. Let me add the 50 line for those that don't add the 50 line. To add that 50 line, starts at the average. You can go to the levels, click on this pencil icon here, then click on this plus icon, add the 50 right here. Oh, sorry. So add the 50 right here. Done it. Then you can go back. Good. So you can see the 50 line now has appeared. So and once the market is on the 50 line or below the 50 line, and now showing signs of what, the market's coming up, thereby the blue crossing over the red line, that means it's time what, for you to buy that market. Remember I said the moving average can act as what, as support, just as it did at this level. The moving average acted as support. Once it gets to that level, the market was detected. Then it come to the stochastic, and see the stochastic is what, is below the 20 line, and now showing what, signs of the market ready to continue in uptrend by the what, the red crossing over. Okay, sorry, in the uptrend now, that means what, the blue is now the one crossing over the what, the red. All you want to know, let that be a crossover. Once there is a crossover, if it's from the up to the down, that means the blue is going to cross over the red. But if it's from the red to the, if from the down to the up, that means the red is going to be done to cross over. Please don't misunderstand this. So okay, let me just say, to make it clearer, once there's a crossover, all you just want to see is what, is the market giving you was a crossover, like somewhere around there. Okay, I lost that market. Okay, good. I think I saw something here. This is a good one now. But at this moment, are you going to sell? Remember, at this level now, the market is about to cross over to the downside. But are you going to sell? Definitely no. Why? Because the market is still above the moving average. So what you're going to wait for is for the market to get oversold, probably get to the 50 line or below the 50 line, then crossed over again. And once you can see that sign of crossover, that's when you can now what, go long on this market. So those are the two major indicators which I recommend. There are other indicators. Probably in our next videos, we'll be talking about other indicators and how to use them. But for the purpose of this, these are my two indicators which I use and also recommend to everybody which I've been talking to. And believe me, they'll be using and be profitable. So please and please, if you can just obey this single rule. Remember, I said the moving average, this is the 50 period. You can use the 200 to know a longer term of the market. Depends on what you're trading. Are you a scalper? Are you a intraday trader? Or are you a trend trader? Are you a position trader? Are you swing trader? It depends on. So what just into this what you've already know what the moving average is used for. You've already know what the stochastic is used for. So now put in your period to suit you. Put in your settings to suit your trading style and try to backtest it. Try to check how the market has been reacting to that your settings. And once you have a setting that you think is at least 80 to 90% or even 70 to 90% are profitable, you can start using that indicator. That doesn't mean that the indicator is totally wrong, because people have this ideology that the indicator is totally wrong. But at the moment when you don't have to use the naked chart, how do you do it? Does that mean you don't have to trade? No, you can see the indicator, but indicators, why most people don't use, because it doesn't tell you what's going to happen next. And that's why I'm giving this two indicator combination, which gives you a little bit of what of the support and resistance level, which is the moving average, and still giving you what the trade signals, which comes in the what in the stochastic or the RSI. So that is, I really hope this video is helpful. Please do well to what to let me know in the comment section what you think of this particular combination. So if you have any other question or information, you can still drop in the comment section. And please don't forget, as I always say, we are having our next midweek review. Is it midweek? No, sorry. We'll be having our weekly review, that is on Saturdays, and our midweek review on Wednesdays, and of course every Friday is going to be our academic sections, where we'll be telling you other things you should know aside just entering and leaving the market. What are other things that controls the market? What do you need to know more about the market? So that's what we'll be talking about every Fridays. So please, if you haven't subscribed, don't forget to click on the subscribe button below. And please also do well to hit the like button and what? Click the bell icon beside the subscribe button to make sure you get notified whenever we post a video. And please don't forget to share this video with your friends and mainly your trading ones, just to make sure this information goes around as far as possible. Once again, thank you so much, and I really wish this video is helpful to you. And please, if you have more information or if you need more information, just drop in the comment section. I will always reply you as soon as possible. Once again, I wish you all a successful and profitable trading week, days, and years ahead. Bye for now, and of course, I will see you in the next video.